in exercise. So we have four types of registers in exercise. So we have four kinds of registers. The first register is RG1, second one is RG23A register, third one is RG23C register, fourth one is RG23D register. So these are the registers what we have in the exercise. So RG1 register is for finished goods. Okay, so the entries what you will be making in the RG1 register is finished goods. Okay, and RG23A register you maintain raw materials. And RG23C is for capital goods. Capital goods means nothing but like assets, computer what you buy for company, or a vehicle which you buy for company. Everything is the capital goods. RG23 is for depot register. This is maintained at the depot. So let's see all of these in detail. How do we maintain and what are these registers? RG1 register, the first one. RG1 register, and we already discussed that RG1 register is for finished goods. Finished goods. So the register how you maintain in RG1 register is receipts and issues. Receipts is handled by right? Receipts like coming inside the plant, and issues distribution is handled by SD. That means you manufacture some goods and you receive the goods. Suppose say you manufactured X material 10,000 goods. Okay, that is receipts. That's what, right? You manufacture and you receive that goods to the storage location plant. Issues, you deliver that goods. Say suppose out of the manufactured 10,000 goods you delivered 6,000 goods. So this is delivered goods. So in the RG1 register, this is what the details you will be maintaining, that is receipts and issues. These both should tally, right? That's what if the excise department comes for auditing. So what they check? They check against these receipts and issues. If 10,000 you manufactured and you have the goods, 6,000 you delivered, and still you should have 4,000 here. Okay, this is what they tally and they check. Next is RG23A register. RG23A register. This is for raw materials. And you know which module consultant, like not consultant, which module maintains this particular raw material is module, right? Raw material, the goods what we receive inside the plant is maintained by So RG23A register also has, here it is part 1 and part 2. Part 1 and part 2. Part 1 quantities, part 2 values. Quantities means, say if I say X material 100 quantity, part 1, this is equal to each quantity of X material is say 100 rupees, that is 100 into 100. That's the value you should have, 10,000 here. It should tally. Okay. So raw materials, part 1, part 2. Part 1 is quantities, part 2 is values. And the third one we have RG23C register. RG23C register. This is for capital goods. Capital goods are assets. Capital goods assets means whatever you buy for your company. It can be tables, it can be computers, it can be trucks, anything whichever you buy for your company as an asset, right? This table, computer, truck, this all is going to be an asset tomorrow for you. So that's a capital goods. So whatever you buy, that you would be maintaining in register RG23C, and who would be maintaining the assets? FI. As I told you, SIN is classified into SD SIN, MM SIN, FI SIN, right? So FI would be maintaining this. So here again, part 1 and part 2. Part 1 is again quantities, part 2 is values. That means if you say I have 100 computers, the value of 100 computers should be reflecting here in the values. Okay, that's what they check here. And fourth, RG23D register. RG23 register. This register is maintained at the depot. Okay, it's maintained at the depot. So here, yesterday, if you remember, we have seen J1IG and J1IJ. So what you do? J1IG, you capture excise. J1IJ, you distribute excise. J1IG is handled by MM. J1IG is handled by SD. Why? Because who receives the goods, who raised the PO, who receives the goods in the STO process? MM, right? So this J1IG capturing MIGO and J1IG tax, everything is by MM. And the issue, when you distribute this particular excise to the customers, when you do the delivery, right? This is handled by SD. So these are the registers what we have, and this is what we maintain the registers. And the process in registers. So what is the process in registers? We have the first process in the register is update register. Second, extract. And the third, take a printout of it or just data download it. So every month this is the activity what they need to do, and they need to keep the records of this so that at any time the department comes for an audit, they will tally, they'll go with this. So you need to update your register with all these things. Okay, today you buy 100 computers. Okay, you need to enter in this register and values in this register. So like this, you enter in the end of the month, what you do is you extract that register. That means for this month, what all happened, a record will be extracted. Either it would be printed or downloaded and submit to the excise department so that they can tally. See, when you're paying income tax, what you do, you produce all your bills, rental agreements, XYZ, everything, right? So that's what here also. That's what you do in the excise. So let's see the configuration. The first configuration of factory sales. Factory sales, first configuration, coming to the SIN. So before going to the actual this configuration, first you need to do a little FI configuration. Actually, this is already done by FI people actually, so you need not to worry in the real time. This would be maintained by them. So later you will be starting configuring of SIN configuration. So the first configuration step, what they have to do is defining the tax procedures. Okay, so we already looked into it earlier also, OBYZ, when we discussed about master data. If you go back to the master data in the document, you can find this, how to define a tax procedure. So the tax procedure, what you are using here is TAX INN. Okay, tax INN, condition based. This is what you need to see. By default in standard, you will not have this tax procedure in the system. In the IDAS system, you need to create yourself. Okay, just create it. You need not to look into the controls or anything else. Just go to OBYZ and create a tax procedure. Then next, you need to assign country code to this particular tax procedure. That is, in the second step, what you will be doing, going to a transaction code OBBG, where you will be assigning for this procedure what all you define here, country IN. You will assign that. Okay, so this is the two steps which FI consultant has to be, they have to create it. Okay, then after you can start your SIN configuration. Coming to this particular factory sales. Okay, so let me show you SIN where you can configure in the system. /n SPRO. Okay, so SPRO logistics general. Okay, SPRO logistics general. Scroll to the down in the last, you'll be seeing tax on goods movement. So this is one, tax on goods movement. Select this, select country India, basic settings. So this is what you would be configuring first, configuring excise registrations, this all things. So the first step what you will be doing is excise registrations, maintain excise registrations. Click on this. Okay, excise registrations. First number. See this number what you're seeing, the excise registration number, it is internal, which you use within your organization. External number is this one. Why? Because you know, right? Can anyone tell you their not PAN card number, your driving license number or passport number? It's very lengthy, 10 digit, 15 digit. You can't even remember your passport numbers and these things, right? So your excess registration number also looks like that. You cannot remember your excess registration numbers. 301296/215 like this it would be. So instead of such a lengthy number, for easy communication within the organization, you maintain a short code that is 900. Okay, 900 is nothing but the same thing. But in all external communications, you should print this. But for internally, you can refer to this. Okay, so so this is the number what is provided by excise department to you. Okay, the excess this is what the number actually what excise department has provided to you, but you maintain a short code for your reference, quick reference, that is 900. The next is, this is internal number, ECC number. ECC means excise commissionerate office. Okay, ECC means excise commissionerate. So every department has a commissionerate, right? You have income tax commissionerate, like that. So what is the commissionerate number? Who has issued this number? Under which range? Whether it's a Hyderabad range, Bangalore range, you will have range actually. Okay, so who has issued this number? So that they'll be having a code actually. If you know the income, the PAN number, if you apply, there will be right ward number, circle number, like this excise commissionerate number. So any external communications, you have to print only this number but not this. Then next, excise range, where it is, excise division, and what is the commissionerate. So this all these all things you will get from the user in the data, like say in the initial when you are implementing this, the requirement gathering, you will collect all these details from the user. Okay, the next is liable for AED. This is additional excise duty. That's what we discussed. This is applicable only for few industries. That means if basic excise duty, education sales, secondary education sales are mandatory. Any organization, you manufacture from a pin to aeroplane, it is charged. But we discussed, right, additional excise duty and special excise duty is only for few organizations or few industries. If your client is into that industry or that kind of product manufacturing, select this, liable to or liable to SCD. Okay, then next is EI items. EI item means excise invoice items. EI means excise invoice item. See, if you remember, in the copy controls also we discussed, sometimes you want to restrict the number of line items in a invoice. How you do that? We do some VBRK, we maintain 007 as the requirement, and we have one configuration assigning document type to the sales organization and number, whatever the number you want to restrict, 5, 10, something like that, right? So even this is like that. EI item, if you put 5, that means in an excise invoice you cannot put more than 5 line items. It restricts the number of line items in an excise invoice. Okay. Registration set, anything, it can be a description for you, a meaningful description, whatever you can understand. The next is partial credit. So if you activate this, system will allow you to take a credit. Okay, you can take a credit up to certain balances like SENVAT utilization or some balances you can take the credit. Whether it's allowed or not is controlled from here, activated. Then next is indicator NCCD. NCCD means national, national calamity contingent duty. This is again one kind of duty. Okay, this is one kind of tax which government apply only on certain unforeseen situations. Okay, NCCD, natural calamity contingent duty. That means earthquakes, tsunami, floods. So under any natural calamities or unforeseen situations, so again to restore that particular area, government has to give some helping hand, right? So how they do? They charge this NCDD duty on all the organizations, and that amount they will spend on that area to upliftment of that particular area. Okay, recent Chennai floods, or you take earthquake in the eastern part of India there. Okay, so this tax is not applicable all the time. It is applicable only when government tells I am imposing this to you, the reason is this. Okay, and liable 81 82, this 81 82 should be always checked. Why? Because as I told you, at the time of SECS was not there at that time in 2007, and there was a panic across the pan India. Okay, then SAP has come up with these 2 fields, actually 3 fields. Okay, say, and SAP told that for SECC select this. 81 is all about special this thing, secondary education says, so select this. In the real time, I hope you may not see this. Gaurav, is this there in the real time in your system? It should be SECS, right? Gaurav is there. Gaurav, can you hear me?
Yeah, it is 81 only.
It's still 81 only? Okay.
Yeah.
You're using ECC 6, right? And EHP latest one?
Yeah, in the particular client which on which we are working,
Okay.
it is same.
Okay. So you may not be seeing this in other organizations, but because it is changed now to the ECC, SCCS or something. But at that time, SAP has given it is 81 or 82, and this should be always activated. Without this, you cannot raise the excise invoice. Why? Because SCCS tax will not be determined into excise invoice. So that is liable to 81, 82, something XYZ is here. So come back once after maintaining this, all things come back. The next is company code settings, second configuration step. Click on this company code settings. So select your company code. So you to go to the new entries and create your company code, and then next standard document type, SENVAT utilization document type, it is SA. It's a standard you maintain, and both utilization FI document type is also SA. Both are same. And activate this all things: debit account override, adjust auto adjustment indicator, and immediate credit on capital goods. Okay, activate this all 3, and select your first month of a calendar year, that is April. Right, in India it's April, right? So select it, April. This is the first month of our financial calendar year. And excise dates, what are the dates you have in the excise? 30, and the number of excise invoice selection sums are something same 30, and FIFO. Select this to rounding duty on procurement, rounding duty on removal. And exchange rate type CVD is B, and exchange rate type for exports is B. So just maintain what are the values you are seeing, that just exactly maintain. So let's see some out of these two or three fields are important. Let's discuss that. So rounding duty on removal, this one, rounding duty on removal. So if you activate this particular check indicator, then excise duty will be rounded off. When create excise duties, never it should be in the decimals. It should be only in the round figure. So if you activate this, system will round off the excise duties if it is in decimals. Okay, in the excise invoice. And the exchange rate type for exports, this one B, exchange rate type for exports. See, every month exchange rate type means when you are exporting, what happens? You get dollars. There is some exchange rate, right? But the exchange rate changes every day. So how you will keep up with that exchange changing rate? So every month starting, exchange department will give you some exchange rate for that particular month, and throughout the month that itself, that will be the exchange rate, whether dollar goes high or up, down, whatever it is, the rate is fixed, that you will be maintaining here. Okay, and this exchange rate is valid throughout the month. So, and this will help us to convert the customer currency to company code currency. That's the second step. Come back. The next is plant settings. Click on this plant settings, and consultant is responsible to do this particular step. Okay, this third step, consultant should do this. So in this configuration, what you do is you assign your exchange registration number, the internal exchange registration number, to your plant. Okay, you will assign your exchange registration number to plant, and if your plant is a depot, then activate this. This is where you mark whether it's a depot or a plant. Okay, so here we differentiate a plant and depot. If you have, if this is a depot, what your this Z900 is a depot, then mark this, or else leave it blank so that it would be a plant. So once after this, come back and maintain excess groups. So excess group is like, say, it's an internal grouping which we do for the purpose of determining the excess number ranges or excess GL accounts. Okay. So this grouping will help us to determine excess GL accounts and excess number ranges. So create some group, it can be anything, F1, X1, whatever it is, and assign your plant here, and internal your excess registration number, and select this default challan quantity in GR, and don't select this excess invoice during billing or creating and post invoice single step. Don't select this. Why? Because if you select this, what happens is you cannot see the process what's happening. Why? Because when you create a delivery or billing, system automatically in the backend automatically it will raise an invoice. So you will not get a chance to go to J1INN and create a excess invoice. Okay, so but in the real time you may check it. Why? Because you don't want that step to be next. Okay, so when you create, automatically system also will create in one step. In one step it will create a excess invoice and it will post the values into the accounting. But as of now, don't check. In the practice purpose, don't check. Why? Because you want to create that manually. Then next, if this plant is a depot, okay, earlier what in the configuration, if you maintain Z900 as a depot, if you activated that indicator, then activate all these things, depot indicator, folio numbers, depot numbers, activate all these things. If it is only depot, if you marked it only as a plant earlier, leave this all blank. And Mego settings, in the Mego settings, EI capture, post EI in Mego, duty difference at GR, upgrade. Select all these things. If it is depot, Yeah, create, yeah, this one RG23, this one. Don't check this, don't activate this, except this, activate all the things. Okay, if this particular plant is a depot, then only activate this. Why? Because what is the register for plant? Depot RG23D. That's what we discussed, right? So if it's a depot, then only activate this particular. If not, don't do that. So come back. So the next is, yeah, very important. Uh, Plant access, right? We have discussed. Excess invoice, yeah. So this field, excess invoice during billing, if you activate this, like while creating invoice, system automatically, it will create an excess invoice in the background. Okay. And the next is create and post individual step, this one. So this field will be used only for excess invoice for other adjustments. Sometimes you have some adjustments. Okay. And the very important is the T code of the other adjustment. J1IS. J1 is the T code for excess invoice, other adjustments. Okay, J1IS. Come back. The next is series group. Select this. See, each excess group is again classified into a series group, multiple series groups, because for the range of number ranges. Like see, excess again, domestic exports. Domestic will have a different series. Exports will have a different series. Okay, so you create some excess. It can be anything. Suppose my excess registration is 900, so again it's classified into domestic and exports, and that again it's having a different series numbers. Okay, you just go to the new entries and create that. There is no standard like D, it should be only D11. It can be anything. The next is maintain excess duty indicators. That means how the tax is applicable, whether 100% tax or a 50% tax or a nil duty, that is no tax. Okay, so we have these three, nothing to do here. It's already there in the system. If you don't have, you need to maintain these tax indicators. Come back. And most of the fields in the exercise may not be there. And first of all, check whether in your IDA system the SYN block is activated or not. SYN should be separately installed and activated. It will not be there in the direct IDAS ECC system. So once after basic settings, close that and go to the master data. So in the master data, the first is maintain chapter IDs. So chapter ID, it's nothing but it's an identification provided by the excise department. That is, see, whenever government come with the budget every year, in the March they introduce the budget, right, in the parliament. So immediately you will be seeing some scrolling on the TV saying that prices for refrigerators goes up, prices for leather footwear comes down, prices for cell phones will go up. How they can tell that? So government will issue the excise rates basing upon the chapter ID. Chapter ID is nothing but grouping of the similar nature of products. So they'll be telling you, right, all the automobile prices will go up or all the electronics prices will go up. What is electronics? All the electronics will be grouped into one chapter ID. So the government will not tell for refrigerator this is price, that is price, or for TV this is something like it will give tax basing upon chapter IDs. Okay, it will release the taxes based upon chapter IDs. Okay, so a chapter ID, okay, this is a chapter ID, say suppose, and what is the chapter ID here? It's in all the insulin products which are maintained in bottles. Okay, this chapter ID is for all the insulin products which are maintained in bottles. Okay, so chapter ID, it's nothing but it's an identification number provided by excise department for a similar nature of products. So any insulin product, now the tax is this. So government will issue these excise rates in relation to this particular chapter ID every year, and so we have to maintain excise condition records based on this particular chapter IDs. So later when you maintain the tax, excise tax, you will be maintaining basing upon this chapter ID. So give some chapter ID like this. So save it, come back. Come back, assign user to material master screen sequence for excise duty. Okay. See, I don't know whether you observed or not, or else you go to your SAP ID system and check. Go to customer master XD02, change mode of your customer master. Okay. Okay. So you just see here in the customer master whether you have this field called SIN details. Most probably you may not be having this. Okay, you may not be having this particular tab called SIN details in your customer master. So how this SIN details, this particular button here, tab has come here in the customer master because of this step. Because of this step, assign user to material master screen sequence group. Select this, assign user ID here. Okay, so when you are here, select user screen reference, select this, and here assign your particular user ID. Your most probably it would be SAP user, so assign it here. So if you assign this, what happens in the customer master, you will be seeing that particular ID there. Come back. Then next, yeah, master data, that's it, close it. The next is account determination. So select this account determination. The first is define GL accounts for taxes. So in this particular configuration, you will be assigning sales tax GL accounts to the combination of tax codes. Okay, you will be assigning, this is done with the transaction code OB40. Okay, the FI guys would be taking care of this. Okay, OB40, and you can do it directly. MK, you can select something. Select MW3 sales tax. So chart of accounts INT. So XYZ, you will be maintaining these all things. Anyway, this is maintained by the FI guys. So the next is specify excise accounts per uh, excise transaction. So this is where the accounting entry controls. You see credit, debit, credit, debit. So here actually this step controls the accounting entry of excise transactions. So what should be the debit, what should be the credit, and these all things. So for this I will be sharing the document. You can refer in that document, but because there are a lot of transaction types here. Okay, DLFC, ARE1, ARE3, CAGI, lot of transactions you will be having. So you can just refer to the document for this. And you can also see that what is debit side, what is credit side in the document itself. I mentioned there what is the debit side and what is credit side. The last step is specify GL accounts for excess transaction. Even this is the same. So here in this configuration step, you will be assigning excess GL accounts to the combination of excess groups, excess transaction types, and company code. Excess groups, excess transaction type, and you'll be have these are the accounts and chart of accounts, and you will also have company code. Yeah, here itself company code. So with the combination of this, you'll be maintaining here. This will be anyway documented and given to you by FI guys. So you know how to create a GL account. It's the same T code FS00 through which FI guys maintain or create a new GL accounts or maintain the GL accounts FS00. Through that they will be creating this particular GL accounts. So how to create and everything, all the process is given in the document, so you can just follow that. So you will be knowing that. So after the account determination, yeah, the next is business transactions. So here where you will be defining incoming excess invoice, outgoing excess invoice. So incoming is handled by the MM. Okay, it's MM sin. So incoming excess invoices. So what are for excess that is for MM? The registers we already discussed, right? RG1, RG23A, RG23C, right? So what is the here in this step? What you do is you maintain the moment type. Okay, you maintain the moment type which is involving this particular excise invoice. For this, if it is incoming, you maintain incoming excise in moment type. Outgoing moment type. Okay, RG1 receipts and issues, right? Receipts is handled. RG1 is finished goods, right? FERT. Receipts is handled by MM. Issues is handled by SD. Receipt, what is the moment types? Various moment types. 101, MEGO, right? 561, initial stock upload. 651, lot of moment types we have here. Okay, it's mentioned in the document anyway, you can go there. Issues, our standard PGI moment type 601, 631, consignment, 641, STO, 647, STO. So like this, issues. So here you will be assigning the moment types for the transaction. Okay, it specifies RG23A. RG23A is for RG23A. What is, it's a capital goods, right? No, RG23A is for raw materials. Okay, we have two parts here, right? Quantities and values. Okay, so quantities, you receive the quantities. Who will receive? MM, moment type 101. When you receive, how you capture? With MyGo. So 101 moment type. Then next, RG23C. RG23C. RG23C is capital goods, receipts. Who will receive? MM. And when they receive, how they capture? Moment type 101. So in the document, I clearly mentioned which moment type is for which register. So just make a note from there. So what this particular step controls is, the step controls which moment type should be updated and which register, in which register it should be updated, whether it's a receipt side or the issue side, wherever it is. So then next, after the incoming invoices, go to the outgoing excess invoice. In the outgoing excess invoice, you have assign billing types to delivery types. Select this. Okay, so here you would be assigning your delivery type to the billing type. Okay, so the process goes like this. order, delivery. So once delivery is created, it's a proforma invoice, or if it is a standard invoice also, it is excise invoice. Up to the proforma invoice, you can again create a excise invoice. Okay. So what system will do is, it will not allow here. Once you create a proforma invoice, system should not, once you already created an excise invoice, it should not again allow you to create an excise invoice. Okay. And this control is assigning the billing type to the delivery type. So you can tell for which an excise invoice should be raised and for which an excise invoice should not be raised. That's what this particular delivery type assigning to the billing type controls. And this is where in the interviews also, if they ask you, do you have any copy controls between the invoice and excess invoice? Yes. This is the step is acts like a copy controls between the invoice and excess invoice. Why? Because it tells with reference to what you need to create, with reference to what you should not create. Okay. So this step is also will also act as a copy controls. So the next is maintain default excess groups and the series group. Okay, so in this step what you'll be doing is you will be assigning default excess groups which you already have and series groups, which will help to determine series group. Automatic series group is nothing but like a number range. Okay, so it will help us to determine that when you create an excess invoice, and we will assign this particular excess group and series group with the combination of sales area, shipping point. Okay, sales area and shipping point. And this configuration step will also help you to determine or differentiate whether the process is a domestic process or it's an export process. If it is an export, again, whether it's an export or it's a deemed exports. Okay, and it will also help us to differentiate whether it is a exports under bond or LOU or rebates. But because every process has a different series group and different number range. Okay, so that's what you'll be configuring here. So I'll share the document, go through the document so you'll be understanding what I'm talking about. Okay, so that's it in this configuration. So we'll call it a day today here, we'll stop it here, and tomorrow we'll see pricing for the excise. Okay, how we'll configure the pricing for excise, and most probably we might be closing tomorrow for this particular factory sales. Configuration for the factory sales will be completing tomorrow. Okay.
Hello, Praveen.
Yeah, Gaurav.
Praveen, videos for this recording, could you send?
Yeah, I'll share, Gaurav. I was little occupied, so I could not do it. But every video is uploaded except today's. So most probably I'll share it today itself.
After class 42 of which you took for STO, after that we had not received any videos after class 42.
And 42 is the last, I guess. 43 is today's class, right?
Okay.
Okay, 45. Okay. There are 3 classes after the 42, 43, 44, 45. Including today, there is 3 classes.
Yeah.
I'll share them.
So, okay.
Okay. Okay then. So let's call it a day today and catch back tomorrow. Have a good day, everyone. Bye-bye.